And good afternoon. Welcome into Market Talk for this Tuesday, March 1st. Thank you so much for making us part of your day. Thanks for joining us. I'm your host, Jesse Allen. Find us online, markettalkag.com. That is our home on the web. Markettalkag.com is where you could find us. All of our social media links are there: Facebook, Twitter, Instagram. Also, you can find all of our streaming sources there, latest news of agriculture, and much more. It's online at markettalkag.com. Well, another day of sharply higher grain and energy trade as we have basically just deja vu, continuing to watch these markets react to what's going on in the Black Sea region. Here to talk about all of it with us, provide his perspective today, our good friend Matt Bennett with agmarket.net joins us. Matt, good to have you back on, sir. And no doubt, very interesting times as a trader and a farmer, just watching these markets. This is some crazy stuff going on.
It's wild. I mean, it's really wild. I think a lot of producers are, trying to get their head wrapped around what does this mean to me? What can I do with this? And quite frankly, there's a lot of volatility and a lot of risk in what's going on currently. But at the same time, well, there's a lot of opportunity too. I mean, there's a lot of chances for producers and a pretty exciting dynamic situation after, we just set the crop insurance price, finalized that yesterday, Jesse, and we're at 590, and we closed the day at 624 and three quarters. So essentially 35 cents above the February average that we closed on March 1st. I mean, when's the last time you saw something like that happen? And so it's just a incredible situation. Now with beans, it's relatively speaking, it's nowhere near that kind of a difference. I mean, it's 14.77 versus a 14.33 price. So yeah, it's 44 cents. But when compared to 35 cents on corn, either one of them we'll take. I mean, there's no question. But it's going to provide for some very interesting situations moving forward. I've been trying to talk to producers about, that they may be able to self-insure a little bit here if this market really races here over the next week to 10 days.
Well, and we look at these markets, and before we really dive into anything specifically, I just look at all this, and we continue to maybe race higher. I wonder your perspective. Say we maybe level out here a little bit. We find a spot where we kind of maybe get range bound, develop some ranges here for the next 30 to 60 days. Could these price levels impact our spring planting decisions to some extent, do you think, Matt?
Well, there's no doubt that the tendency here, corn versus beans is really went in beans' favor, really since the first of the year or a little bit before that. At this stage of the game, it sure looks like December corn has tried to kind of stage a bit of a rally over the last several trading sessions, especially versus Nove. Now, Nove had a good close today, up 41 and a quarter cents. Yesterday, we were up similar levels. And then actually right at the close last, part of the trading day, we gave back some gains and closed up 20. Now, we just went up 60 cents in 2 days. But whenever you look at, for instance, the May going up 53 cents today alone, obviously Nove's lagging just a little bit versus the front months. Same thing with December. It's very interesting. But my personal opinion is that you really need to see price levels at that $6 level and above to get people, I guess, strongly interested in switching acreage that I would say isn't ideal, not high pH, APH type acreage, because we all know fertilizer prices have been enough to make someone a little gun shy. Most people are going to put $1,000 an acre into a corn crop pretty handily. I think that's a pretty common occurrence. And so you better have pretty good APH if you're going to roll with corn this year, especially on some marginal ground.
Well, and you mentioned fertilizer prices, and with everything going on in the Black Sea with Russia, Ukraine, one has to wonder, will we have enough supplies here in the U.S. For this spring if guys decide they want to switch a little bit? I think that's a big question. Now, it's outside of anyone who fall applied. We already know they're probably doing corn. But, looking at the spring, I think getting 30 days out, 60 days out, seeing what prices are, seeing what's available, that's going to have a big impact as well.
Absolutely. And so, if there's any switching going on, from the bean mindset over towards corn. Again, you're going to need to feel real confident about being able to get a hold of the inputs. There's going to be issues for inputs for both corn and beans, and some of those will be revolving around chemicals. Quite frankly, I know there's a lot of angst there, a lot of frustration on exactly what the situation will be whenever the time comes. I know several producers that had chemicals bought, went to pick up their totes, and no room at the end type deal. There's just nobody there to be able to get them what they need, even though it's paid for. So there's a lot of interesting situations that are going to develop this spring. And I think that's part of the reason why the market's got to have still a fairly tense tone to it, because there's just so many unknowns. And so if as we sit here today and we feel pretty confident, at least I feel pretty confident, you're going to continue to see corn exports pretty solid. You're going to see inspections continue at a pretty good clip, especially what's going on in the Black Sea region. With that being the case, I'll tell you what, it looks like this U.S. carryout is on the way down. And let's say we get it down to 1.4 below. Well, I'll tell you what, you better have a good planting season. You better have a good safrinha crop. If either one of those two are not the case, this could be an extremely volatile ride, and it could put some prices on the board that we haven't seen before.
Well, and you mentioned that safrinha crop in South America. Of course, we're continuing to watch that, and I feel like that's maybe getting lost in some of the headlines. But still watching dryness concerns down there. How's that going to affect the safrinha crop, the soybean crop down there as well? And I think that's something that we can't lose in the big picture here, because that's going to be very, very key, as you alluded to, the next 30 to 60 days and on forward, Matt.
Yeah, I mean, you look at the world balance sheet, for instance, and the USDA has essentially said we're going to build 10 million tons of stocks. And to do that, they had to ramp up world production 82 million tons. I mean, that's an incredible amount. Now, is that altogether impossible? Heck no. Anytime you see high prices of commodities, typically what you're going to see is the rewarding of acreage around the world with those particular commodities. So is it possible? Yes, but you're also making some pretty bold assumptions, that you're going to have a lack of weather issues. USDA is calling for a 181 yield here in the U.S. Absolutely, we could have a 180, maybe even a 185 if ideal conditions happen. But geez, Jesse, I mean, you look at the National Drought Monitor, it looks worse this time of year than what it did in 2012. Now, that doesn't mean it's going to remain there, but typically when you get into drought situations, it's awfully hard to break out of it. And so, I know a lot of producers in the Western Corn Belt extremely concerned right now, and don't think that's not going to impact some acres decisions as well. If you can throw a bean crop in the ground for, half the price that you can throw a corn crop in the ground, you can't imagine that producers that are in a really dry situation aren't going to strongly consider that.
I think as well we have to watch wheat, as wheat obviously mainly affected by this Russia-Ukraine situation. We've seen, KC Minneapolis wheat now over $10 today at the close. And you think about some of those acres in the northern plains, a lot of people focused on those acres of maybe that could be some spots of switching. But I mean, if wheat prices continue to skyrocket and that wheat balance sheet continues to shrink, what does that do for spring wheat planting as we go into the spring? And we think about the dryness in the southwestern plains as well. So wheat is a big story, I think, as well, Matt.
Yeah, it is, and I mean, you've saw a fair amount of $10 spring wheat prices over the last several months. I mean, you closed today above $10. If you don't think people don't want to plant spring wheat with those types of price levels, then you're sadly mistaken. So I think that if Mother Nature cooperates, you're going to see an incredible, amount of spring wheat acres that go in the ground this spring, which is, it isn't cheap to put wheat in the ground, but it's cheaper to put wheat in the ground than to put corn in the ground. And so, I've got to think that the guys that like planting spring wheat, they're going to be definitely pushing pretty hard on planting those acres. So, I think when you look at it all together, I mean, USDA is calling for 2 million extra acres of wheat. I think that's the bare minimum, quite frankly. Could there be some abandonment? Yeah, it's going to be due to drought. So it's highly unlikely those acres get planted to something else without a major reversal in fortunes as far as weather's concerned. So, it's going to be an interesting acreage discussion. USDA baseline numbers didn't really pump up cotton acreage, which I thought was perplexing. Whenever you see some of the The surveys come out that say we're going to increase 300,000 to a million acres of cotton. I guess it's hard not to think that's going to happen with triple-digit cotton. But yeah, it's going to be a very tight acreage battle. And I think that what you're going to see moving forward is producers are going to not only go with the higher priced or higher profit, situation. They're going to be looking very closely at, especially where it's super dry, at minimizing the outlay of, expense that they've got to put towards that crop.
So hypothetically, Matt, I'm a farmer sitting here March 1st. I haven't really marketed anything per se for new crop. I know what I'm planting. I'm not going to make a change. To me, I mean, it would feel like this would be a good opportunity to at least protect some downside depending on what I'm planting, corn, beans, wheat, you name it. Otherwise, it would just seem maybe foolish to not do something at this point if you are pretty confident you know what you're going to put in the ground here in the next 60 days.
Absolutely. And so, if you only heard like the clip that I said we could see prices for corn we've never seen before, that in and of itself gets a lot of us in the mindset that we don't want to do anything, that we don't want to sell anything because this market's going to take off and go. And so I sure hope that people listen to the entire thing. If they want to give me a quote, I would rather it be a quote like this. And that is, when you've got prices racing to levels like this, if you're not doing something to lock a floor in under them, then I think that you're missing the point. Jesse, last Friday, everyone was in full on panic mode. Is this market over with? Are we going to come in Sunday night and kill this thing? Those are the questions we were all fielding on Friday afternoon. And so you got to remember, we're just sitting here on Tuesday. You've had 2 excellent days in a row of markets. You're still not back up to the highs on everything by any means, but what have you done? You've raced higher. And so you've got to take what the market's giving you and do something with it. Now, does that mean that I get myself locked into a bunch of physical bushels? I don't think that's a good idea this year. I really don't. I think that you have to maintain flexibility. I've been trying to caution people as to get too many physical bushels sold in the event that, quite frankly, you don't raise them. I mean, I saw that happen in 2012. I'm still in the elevator business. And I'll tell you what, that 2012 was the best income year for a lot of folks before 2021 in their entire farming careers. 2012 also saw a handful of folks go broke. And the reason for it is that they got too much corn sold and then had to buy it back at $1.50, $2 a bushel margin going into harvest. And boy, that is not a good place to reside. So yes, you're right. We need to be managing risk here, but we need to do so in a smart fashion to where we've got flexibility. If this market races higher, we're not going to get strangled either by margin calls, for instance, or by being in a position where we've got way too much cheaper corn sold and don't end up raising enough of it.
Matt, how much is oil and gas going to play into the grain situation? I know today International Energy Agency agreed to release 60 million barrels of crude from reserves to try and cool the markets. To me, that feels like a band-aid. It doesn't feel like enough, but I mean, we see crude oil, Brent crude, West Texas surging higher above $100 a barrel. I've heard some folks think, oh, 140 could be out there. I mean, we look at this, we look at oil, gas prices rising. How much is this going to affect commodity prices and farmer decisions right now?
Well, what's $140 oil equate to, with corn? And we had that discussion this morning, and I think you could make the case for all-time highs in the corn market fairly easily. I mean, if you're going to take this oil market up 40%, what's that correlate to on the corn market? I don't think it's 40%. But let's say it's 20%. Let's say it's 25%. If you tack on, for instance, $1.75 onto a $7 corn market, then all of a sudden you've got all-time record highs. And once you make all-time record highs, some of your technicians are going to say, well, where do we go from here? You can draw all kinds of cool lines after you break through all-time resistance. But, I think what you got to understand, a couple things. The crude oil market's going to definitely play a big role in what we do moving forward. People that are wanting to hedge, for instance, their energy costs for diesel fuel, take a very close look at doing so through the heating oil market. Actually is there's a heck of a lot more going on there. It's easier to get in and out of that market. And I think that it's more applicable for us as producers, if you're trying to do something on the diesel fuel side of it. But overall, you look at a lot of these commodities, Jesse, and I think what you're going to see is an overall inflationary tone. You look at silver's up over $1 an ounce on the day. Gold's been running 40 to 50 bucks an ounce on the day, higher than where we were at. But what's it done to the dollar? I mean, the dollar's skyrocketing, which we all kind of knew might happen with this war situation. So, ultimately, when the dust settles, we don't really want a really strong dollar as producers. I mean, it'd be better to see the dollar maybe back off just a shade. With that being said, I still think we're going to export a heck of a lot of corn and then some of the wheat that we've got left in reserves. The way that it is. When you look at soybeans, yes, we've posted a lot of sales on the Daily Wire lately, but I'll tell you what, at some point, the beans are going to be out of the farmer's hands. And if that's the case, and people still want beans, what's going to happen then? So we can make all kinds of bullish cases, whether it's on oil, on any commodities, especially our ags. But at the same time, a producer needs to be very cautious as to listen to some clown like me on here trying to talk about how things could get out of control, and think about what do today's prices mean for my operation, because I'll tell you what, you lock in, 620, 630 corn for fall, again, drastically above what we saw just for the February average. You're looking at one heck of a good year, regardless of the outcome. And so just lock in some of the worst case scenarios, let the upside go.
Well, Matt, let's move over to livestock real quick. Hogs finally getting some momentum back to the upside, maybe today, triple-digit strength there after a few sessions in a row of downward pressure. Do you think we corrected in this hog market to move it back higher, or are we maybe settling into a range here? What do you think?
Well, when's the last time you saw corn and beans and wheat up sharply on the day, and the hog market up $2 and $3? I mean, that's not normal. It's not something that you're typically going to see. And so a lot of the normal things that you might look at to drive prices, you can kind of throw them out the window. And so, whenever I'm looking, for instance, at the hog market, as long as we've still got this strong export demand, as long as a lot of these barns are still empty, how are you going to kill this hog market? I think you could see hog expansion here in the U.S. People have been making some money here as you move to a fair amount of renewable diesel. As we continue to talk about that discussion, you're going to be crushing a lot of beans for oil. We always crushed beans for meal before. Well, now you're going to have a heck of a lot of meal that I think will be fairly cheap as far as the feedstock's concerned, and it's going to give that U.S. producer in expansion mode the opportunity to make some money in the hog sector. So, for the time being, it's tough to get in front of the freight train. But at the same time, I think eventually you're going to see massive expansion. And I think that that's what the market is trying to do right now. We got to get people, I guess, the labor force to get kind of healed up a little bit, if you will, to where people can have enough labor to be working in these barns. You look over at feeders, though, it's not surprising that feeders took it on the chin, looking at cash corn up the limit. So, I guess, from the fats concern, I mean, I'll tell you what, these fats are pretty interesting to watch. I'm hearing a lot of folks that are hauling fats in. You look on the board and you're 137, 140. I'm hearing about some guys selling $1.50 fats. So, there's definitely very strong cash market, very strong demand. And I think that that's a feature we're going to see moving forward.
I would agree very much so. Matt, a lot of stuff we went through today, a lot of great thoughts. Any final things you have for us on the show?
As always, keep your head. I mean, here's the thing. If you want to try to get yourself wrapped into where this market's going, you're missing the point. I think where the market's already gone gives you opportunities to layer in some protection, and on an incremental basis. If it continues to rally, I'll tell you what, be a student of what you can do to most efficiently protect yourself this year, because it might look a little bit different than what you do other years, but by all means, protect yourself.
Well, Matt, if producers need some advice and help, I know you and the ag market team could do just that. I know they can get a hold of you on the website. They got your app as well. A lot of ways to reach out to you guys, isn't there?
Yeah, get a hold of us, agmarket.app, my agmarket.net. Either one of those places, you can get all those tools and resources, and we'd be glad to hear from you.
Matt, we appreciate the time as always, sir. Thanks so much. We'll talk to you again real soon.
Absolutely. Thank you.
Matt Bennett with agmarket.net, our guest today on Market Talk. Find us online, markettalkag.com. That's going to do it for the Tuesday, March 1st edition of the show. I'm Jesse Allen. Have a great afternoon.